is going to be about a 25 to 30-minute webinar on the 5 methods that we see nonprofits use to reduce their HR cost. And we'll go ahead and cover those. And again, it'll be specifically in the realm of HR. And my name is Lisa, and I am with the Unemployment Services Trust. So let's go through these. We'll take a look at the first method, and that is exercising nonprofits' right. And that is that we have found that 1 in 4 nonprofits actually are unaware that they have an unemployment tax alternative. And what that is it's something called the reimbursing option. So rather than paying a tax, your tax rate will become 0, and you'll choose just to reimburse the state dollar for dollar for any unemployment claims that your former employees make to the state. And if you wouldn't mind just kind of take a look at this poll and make a note to yourself whether you are currently paying taxes into the state unemployment tax system, or are you already reimbursing? Maybe you're not sure, or you're using some other methods such as private insurance, because these are some of the things that we're going to go over. So let's take a look at where your unemployment taxes go when you pay them. Well, obviously they go towards paying the benefits for your former employees, but the rest of it goes to paying for the claims of for-profit companies. So, for instance, every state has a maximum unemployment tax rate, and if there is a for-profit company in, let's say, your state that is hit that ceiling and they're at the maximum tax rate, they may be in a situation where they're paying less in taxes than they have in unemployment claims. And somebody has to pay the difference there. So this is exactly what a pooled liability means. The rest of the people in the pool, including you guys, nonprofits, will have to cover those claims for for-profit companies. Also goes to pay for claims for companies that have ceased operations, administration costs for the state, and then claims that have been paid in error by the state. We tend to see about 1 in 10 benefits are paid out in error by the state, usually in the form of an overpayment, and it can be really hard to catch these without some help. Plus, the state has now determined that the fault for these errors can happen at the initial claim level. So that's why they have enacted what is called the UI integrity law, and I will go into that in a minute. So when you're paying your state taxes, again, you're not only paying for your own claims, but these are some of the things that will be paid for through the state fund. So unlike your for-profit counterparts, you as a 501c nonprofit can become what's called a reimbursing employer, also known as pay-as-you-go, where you reimburse the state only for your own unemployment claims. It is actually a federal law that was passed in 1972. That states this, and we find that there are now a good portion of nonprofits who use this status to pay their unemployment rather than paying these state taxes. So how does UST fit into this? Well, the way that we fit into the picture is, first of all, we're owned by all the nonprofit members that are part of the trust. We were created with the sole purpose of helping nonprofits to become reimbursing employers. So when we'll do an evaluation for you and help you determine if this is a good option for you and if it's a good fit for your agency. And if it is, we'll go ahead and file all the paperwork with the state to get you set up. And then secondly, there are a number of states in the union that require when an agency becomes reimbursing that they post a bond, and UST will pay any bond that is required. It's they do it as a sort of a safety net for them. And then we'll set up your account with us. We'll determine, based on the evaluation that we do, what we feel your contributions to your account should be. And so those contributions will be used to reimburse the state dollar for dollar for your claims but part of the contributions are also designed to build a reserve so that when down the road, if for some reason you do have a spike in claims, it won't affect your cash flow as you've already been building up and you have those funds set aside. And this is just a shot of the states that do require the bonds that I was talking about, just so you're aware of it. In case you're in one of these states, you'll know. And again, we will pay that bond for you. But I do want to just point out the state of New Jersey does require a bond, but because we have worked with this state for so long and we have so many members that have demonstrated that they're building a reserve and funding for future liability, the state of New Jersey has actually waived the bond requirement for UST members. So the next method is maintaining compliance. We know that employers are now under stricter regulations, so we are tending to see a lot more compliance issues come up. And this is in regards to going back to what I mentioned a little bit ago, the UI Integrity Act. This requires employers to respond with all the documentation at the level of the first request of a claim. The state wants to make sure that they're making the right determination the first time around, and they certainly want to try to cut back on any appeals or reversal of decisions. So we want to make sure that you have all your documentation handy and that it's submitted timely. Most states will give you a week to 10 days, which usually includes weekends. So you're going to need to be able to get that information in an easy and quick manner and get it over to the state on time. If you don't, there could be some penalties implemented. Some of the states are actually making it so that you could lose your protest rights, and others are incurring monetary penalties. So there are also a few new regulations going in around fraud to ensure that all the information that's given is correct. So again, we want to make sure that you have all the documentation and all the answers at the initial time that the claim is filed. So through UST, we work with a claims administrator, and what they have set up with the state is an online reporting system. And this reporting system does a couple of things. You can file all of your paperwork to submit to the state through this online system called Case Builder. And so what you do is you'll upload it to their dashboard, and then Workforce Solutions, who's the claims administrator, will go ahead and submit the information to the state on your behalf within the deadline. And there are reminders that will come up from them to make sure that you do submit the information on time. This is highly customizable, so you can indicate when you want something to be urgent, how frequent you want the reminders, and also if you would want another coworker, a supervisor included in those reminders to keep them in the loop. Then the other side is the system will give you access to claims details. So you can pull reports to see who's collecting. You can see how much they were initially awarded and how much they have collected so far. So inherently that will tell you how much liability you have left out there. This will be accessible at any time, and it's updated nightly, so it's almost live. And then we also have a dedicated claims representative that is broken out by state. So the individual that you would be working with in the state that you're in are going to be familiar with all the laws and rules and regulations of your state, and they can answer questions about specific claims and regulations. And this is a screenshot of the claims dashboard that I mentioned called Case Builder. And you can see here in this example there are 38 action items. And out of these 38 that are pending that you need to submit documentation for, 34 of them are urgent. So you can customize these again when they become urgent. And the other nice thing about this, if you look on the bottom right here under favorable decisions, Case Builder is going to point this out to you when something was overturned. So let's say a former employee was originally awarded $5,000, and you won it, and it was overturned, and now they can't collect that $5,000. So you can just see the savings right there that you are helping to have your agency save, because you've been working with these claims and the claims administrator and monitoring them and protesting them and winning them. So your department, the HR department, now can kind of look like the hero in that area. We also have an HR hotline and library for your whole human resources department to have access to through UST. This is included in the program, so there's never any extra cost for this. And what it includes are live phone calls with certified HR advisors. You can call them up, or you can go online and log in and ask your question online through the website. And they have a 24-hour turnaround time where they will get back to you with an answer, provide documentation for compliance, or if you need any posters or backup on the information. There's also an HR library where they will provide templates around all kinds of different forms that you might need help with, where you need a checklist, or you need something about a job description, or maybe you have to write someone up. And they also have employee handbook templates as well. And then lastly, they provide hundreds of online training courses for employees and managers. And one of the most important ones that I have found is the sexual harassment training. There are a lot of states now that are implementing that there's a mandatory sexual harassment training for all management and supervisors in an organization, and you can pay a lot of money to send your team to this sexual harassment training, but this is all included through the HR services line that we have. So you wouldn't have to pay anything extra to send your management team through that training, and you can send as many people as you need without any extra cost. And this is just a screenshot of what the HR hotline system looks like. You can see that some of the common questions are about COBRA, termination questions, compliance questions, FMLA, and this is the link to the 200 plus on-demand training courses that you have access to. So the third method is protesting claims. So whether you are in the tax-rated system or you are already a reimbursing employer, protesting claims is very important because it can save you money. When you're reimbursing, which everyone in the trust at UST is, protesting claims is essential to keeping your costs low. You've got to remember that every claim that you win is dollars that you don't have to pay back to the state. So you want to make sure that you appeal every claim that is made that was not deserved. So anyone that was fired for cause, you want to make sure that you're protesting those and keeping your claims costs low. So again, we work with a claims administrator, Workforce Solutions, and they are experts in this field. This is all they do. They're the largest claims administrator in the nation, and they'll ensure that your documentation is presented timely and accurately to the state. We have found that nonprofits that use our claims administrator, about a third of the claims that are protestable, about 80% of those are won. So you can imagine you're cutting your cost by a little less than a third through the claims management, and that can be a pretty big number that will make a significant difference depending on the size of your organization. So why does any of this matter? Well, of course, the purpose of working with a claims administrator is to keep your claims low. But I just want to show you an example of this is an actual member of ours. And this particular member had an initial claims liability of just over $58,000. And Workforce Solutions was able to disqualify over $17,000 of these claims through protests and appeals. And then in addition to that, they found some errors that were made, over $2,000 that were refunded to our members. So the remaining claims liability out of this was $38,854. So just by properly managing the claims with the claims administrator, we saved this agency almost $20,000, which is, for a nonprofit, a lot of money. So let's say you end up where you do have to go to a hearing. So that's after the initial protest, and you are appealing an unfavorable decision. The thing that you need to do, of course, is be prepared and come prepared. You need to make sure that you have all your documentation ready. You're prepared with your testimony and have your opening and closing statements ready to go. You want to make sure all of this is done ahead of time because these hearings can sometimes move fairly quickly. So when you're working with us, we have a local representative that will attend every single hearing with you, whether it's in person or on the phone. So you don't have to do all of these things or ever go to these hearings again by yourself. You'll have an expert working for you to cross-examine the witness, and they'll give the opening and closing statements for you, and just ensure that all the documentation is being presented to the judge in a way that they will hopefully side with you and overturn that claim. And this is a nice slide that shows you what your involvement through a claim is when you work with Workforce Solutions. So at the initial separation, of course, you'll notify Workforce Solutions and you'll provide them with all the documentation that's needed. You'll also let them know if you want to end up protesting the claim, if your former employer should file for one. So the claim gets filed, Workforce Solutions submits the documentation, and then they protest the claim for you if that's what you choose to do. Then you'll get a determination from the state, and then Workforce Solutions will reach out to you about if you want to appeal the claim, if it was the decision you were not hoping for. So if you do, then there is a hearing, and you will actually have to go to the hearing because the state requires that there's a first-hand witness. But the hearing rep will do all of the work for you. You know, they'll be going with you. They'll work on providing the documentation. They'll prep you for any testimony you may have to give, and then again they'll give those opening and closing statements. So you can see from this graph here that the workload from an HR perspective is significantly less because Workforce Solutions is handling a lot of the day-to-day details for you. The fourth method is having enough cash on hand. So when you're reimbursing, we always want to make sure that you have enough cash on hand because unemployment can be inherently volatile. You can see claims, you're sailing along quarter after quarter, and you can see claims at around $5,000, and then all of a sudden, boom, you have to lay one or two extra people off because you maybe lost some funding, and then all of a sudden your claims can double. So this slide is going to show you how building a reserve can work for you. And again, as I mentioned before, when we determine what your contributions need to be annually, they're designed to cover your ongoing claims, but also to build this reserve for you. So under normal circumstances, we'll want you putting in slightly more than what your claims activity is. So that way, over time, you are building this reserve so that when and if you do hit a spike in claims, your contributions, which is this dark blue line here, won't have to increase very much because now we can draw down on that reserve that you've been building up. And this can go on for years this way. You build up your reserve, you end up having, for whatever reason, a spike in claims, and you draw down on that, while your contributions can stay relatively stable, even if your claims do become a little bit volatile. So the money in your UST reserve account belongs to your agency. It's money that you own. Any funds that are not being used towards claims or your proportional share of expenses is your agency's money. And one of the ways that we help to offset your administration costs to the trust is by conservatively investing the money in your reserve. And we have found that we average over the last 10 years about a 5% investment in return, and also between 50 to 75% of our members are actually participating at no cost each year because their investment return is completely offsetting their expenses of their trust. So in some cases, it's offsetting the expenses and then some. So they're receiving all the services, Workforce Solutions, Think HR, HR Hotline, and all of this at no cost. And if your claims are lower than what we have predicted and your account is in a situation where it's well funded, we'll actually give you cash back, because we never want to hold on to any more money than we need to cover your claims. So every year, starting in your third year forward, our actuary will review your account, and if there are sufficient funds in the account and you have a nice reserve, we'll call you up and say, you know, you've got an extra $20,000 in here that we do not need to hold on to anymore. Do you want us to send it to you? Or sometimes members elect to just leave it in their account to cover their contributions. So whatever you want to do with it, it's up to you. We will do it. Another thing that we try to do is create a safety net for our members. When you're reimbursing, there is no liability on your there's no cap on your liability. The state's going to bill you for every single claim that a former employee files, and you'll have to pay the state back for every one of those claims, dollar for dollar. So we want to help with a safety net through what's called our stop-loss coverage. This is something that we self-fund for. It is not insurance. The trust actually sets money aside every year so that when we see an organization that might suffer from what we consider catastrophic claims, we'll step in and pay a portion of those claims. And that is without expecting that to be repaid to us. So catastrophic claims are defined when a member's claims exceed $25,000 or 3% of their gross wages. Whichever one ends up being greater, that's going to be the attachment point, and then we'll pay double of that attachment point. That way some of your liability is limited, and it'll help in the years if you have a year where something goes wrong and you have to have a lot of layoffs. So then, of course, your reserve balance is there to help you pay for those spiking claims. You can draw down on your reserve, you have the stop-loss protection. So there are several factors working to level out the volatility and the risk. And if for any reason none of that covers you and your account does go into a deficit, we'll give you a full year to recover, and we'll continue to pay your claims on your behalf. Then in the following year, the actuary will assess what payments need to be made to deal with that deficit balance, and then the regular contributions will just continue to deal with your ongoing claims. Method number 5 is benchmarking your unemployment costs. So if you're a nonprofit that is not currently reimbursing, we'd want to take a look at this with you and just see if we can help you determine if you can save a significant amount of money. And if you are reimbursing, then you're either paying for a claims administrator on your own, or you're doing this without one. So you'd want to take a look at us, because we can help you save money through lowering your claims costs through the claims administrator, as well as giving you access to Think HR, and all through the costs of the trust, which are very minimal. Last year, through our savings analysis of a few hundred nonprofits, we identified over $3.5 million in tax savings that they were not taking advantage of. And we also have a lot of reimbursing employers that are interested in us because of the fact that our expenses are so low, and we do have the excellent service providers that we have offering for you. And one of our missions is to keep our expenses to a minimum. So benchmarking your costs is really easy. Whether you're reimbursing or tax rated, go over to our website at www.chooseust.org and just fill out the evaluation form. We just need a couple of pieces of information, the most important being your claims history. So we would need to know what the last 3 years of your claims have been. We'll need to know what your tax rate is if you're paying taxes, and how many employees you have. And then we plug all that information into an actuarial model. And that just tells us, based on the information that we put in, based on the economic health of the state you're in and the nation, comes back and says, yeah, you know what, you are paying a lot more in taxes than you have been using in claims. So this is definitely something that can save you money and you'd want to look at. Or it'll come back and tell us the opposite, that you are in a situation where you're paying a lot less in taxes than you have had in claims, and we will be the first to tell you that you need to stay exactly where you are, that this is not a good option for you right now at this time. So we'll come out with that, and we'll give you a full breakdown, what we think the savings would be, and what the cost for participation is, and what the estimated investment income would be. And we'll fully break it out and do it in a proposal and go over it with you. And we'll also tell you what we think you could expect your reserve would build to over the next couple of years. So you'll know where your money is, what it's doing, and what kind of things to expect from that. So there is a timeline that I need to mention. Most of the states, the majority of them, is November 30th. And what that means is if this is an option that's going to work for you and be a good fit for you and you decide you want to do it, we need to have the paperwork into the state by November 30th. There are a couple of exceptions. California and Minnesota can opt out quarterly, so this deadline does not apply to them. And then there are a spattering of other states that are like the end of the year or the end of December. But the majority of you will be November 30th. So if you do decide that you wanted to opt out today, the state won't make it active until the following year. But just because you can't fully enroll until then, if you wanted to join the trust now and send in the paperwork, we'll give you access to the Think HR hotline and online system until the state changes your status to reimbursing, which would be in January, and you can have all of that access to that for no cost. Your contributions and your full enrollment wouldn't be effective until the beginning of January, but you wouldn't pay anything for these services until then. You could also have some minimal access to Workforce Solutions. They'll do telephone conversations with you to give you advice on claims. They cannot legally represent you in the court hearings until the effective date, but you could get these two things for no cost as soon as you decide you want to enroll and become a member of the trust. So just to quickly recap what UST is versus what it is not. We are a supported reimbursing program, but we are not insurance. We do not underwrite your liability, and we are by no means a pooled liability program. You are responsible for only your dollar-for-dollar claims, but we are an easier alternative method for 501c3s to take advantage of the options that they have. We're owned by all the nonprofits that belong, so we are not a for-profit entity. We're actually what's called a grantor trust. So all the members proportionally share expenses, and they share the proportional investment income of UST. The reserve is an asset on your books instead of a tax liability, and any amount remaining in your reserve is owned by you. We don't do anything but unemployment. We're experts in that field. We don't do anything around workers' compensation or job placement, and our members are definitely not a part of the state unemployment tax system. So as I mentioned, we've been established for just over 30 years. We're led by a group of trustees who are all executive directors and CFOs for nonprofits across the country. We have over 2,000 members, making us the largest nonprofit trust in the nation. And we have over $145 million in assets. That is money that's owned by our members that is used to pay for their unemployment claims. We also just recently conducted a survey where 96% of our members told us that they would definitely recommend us to other nonprofits, and I think that probably says the most about us. We're very proud of that. Last year, through the actuary analysis, and because the recession is now behind us and our members seem to be doing much better, we were able to refund over $11 million to our members. Now that claims have gone back down and things are settling down a little bit, we've identified that we don't need as much cash on hand because claims are not at the levels that they were 3 years ago. So that money is returned to our members. We don't want to hold on to anything extra money-wise that we don't need. And there were over $32 million in claims costs that were mitigated. So that means there were $32 million that were removed from liability through claims appeals and protests for our members. So any questions that you might have, or again, if you want to get a copy of the evaluation, go to the website at www.chooseust.org. But if you have questions or you want to talk to someone and interact with someone, go ahead and email us at info@chooseust.org, or go ahead and call me directly. My name is Lisa again, and I'm at 888-249-4788, and I'll be happy to answer any of your questions and help you fill out the evaluation, whatever works for you. And we can tell you, you know, if you're in the tax-rated system, if there's any money to be saved, or if you're reimbursing, we can certainly show you how you can save money through your claims management. I want to thank everyone for their attendance and attention, and I hope we hear from you, and I wish you a wonderful rest of your day. Thank you.